U.S. Robotics sold itself to history for $6.6 billion. That was February 1997. Wall Street called it the richest deal a personal computer accessory company had ever closed. The stock swap made U.S. Robotics shareholders wealthier in a single afternoon than most manufacturers of American office equipment had made in a decade of operations. 18 months later, the product that earned that fortune was already dying in American homes. Cable modems were arriving. DSL was arriving. The sound that had defined getting online for an entire generation of Americans, that shriek of handshaking tones through a phone line, was becoming a punchline before it became a memory. The company that built that sound was not from Silicon Valley. It was from a low-brick building in Skokie, Illinois, a Chicago suburb that had no business producing the machine that connected America to the internet. And did it anyway, better than anyone else in the country. Every week, this channel tells the story of the American companies that built the machines the office ran on and what the market did to them. Subscribe if that history matters to you. This one begins in Chicago in 1976. The story does not begin with a modem. It begins with a group of University of Chicago students who had just graduated into a decade with no good jobs waiting for them, and a shared instinct that the telephone line was about to become more useful than anyone in the phone company had planned for. Casey Cowell was 22 years old in 1976, unwilling to take a conventional path into law or finance, and convinced that the acoustic coupler, the clumsy rubber cup device that let a computer whisper data down a phone line by literally speaking into the receiver, was a technology begging to be done properly. He and a small circle of college friends pooled what little capital they had, incorporated in Chicago, and began building modems out of a space barely large enough to be called an office. 1976. America had almost no market for what they were selling. Personal computers barely existed outside of hobbyist kits. The idea of two machines exchanging information over ordinary copper telephone wire belonged to universities, to the military, to a handful of research labs, not to a small business in the Midwest with 4 employees and no institutional backing. What did exist was a scattered, stubborn community of computer hobbyists who had discovered bulletin board systems, dial-up servers, often running out of someone's bedroom, where a caller with a modem could leave messages, trade software, and connect to a national network called FidoNet that linked hundreds of these amateur systems together into something resembling the internet a decade before the internet had a name any ordinary American would recognize. That community needed a modem that would not drop a connection halfway through a file transfer. Nobody was building one to that standard. U.S. Robotics decided it would. The company's first serious commercial product carried the name Courier, and it built its reputation on a proprietary protocol called HST, high-speed technology, that pushed data through ordinary phone lines faster and more reliably than anything a hobbyist could otherwise buy. Records from the period indicate a Courier HST modem in the mid-1980s carried a list price in the range of $900 to $1,000, a figure that in today's money would sit well north of $2,000 for a device the size of a paperback book that did nothing but let 2 computers talk to each other over a phone line few people yet understood the value of. It was not sold through electronics retailers. It moved almost entirely through mail-order catalogs and word of mouth inside the BBS community itself. One sysadmin telling another which brand never dropped a carrier signal at 2 in the morning during a file transfer that had already taken 40 minutes to get that far. By one account, U.S. Robotics had grown to several hundred employees by the late 1980s, still headquartered in the Chicago area, still privately understood inside the tight technical world of bulletin board operators as the modem manufacturer that engineers trusted and casual buyers had not yet heard of. That gap, trusted by the people who understood the technology best, invisible to everyone else, was about to close. The company that had built its name inside a subculture of hobbyists trading files at 3 in the morning was one product line away from becoming a household name in every American city with a phone jack and a computer. Word spread through the bulletin board underground the way it always did in that era. Not through advertising, but through the machines themselves, tested at 3 in the morning by people who had no patience for a modem that lied about its own speed. Every BBS operator had a favorite horror story about a competitor's device that claimed a connection rate it could not actually sustain, that dropped a file transfer at 90% complete, that required a hardware reset in the middle of a call. US Robotics built its entire early reputation on refusing to be that story. The HST protocol was not the fastest technology on paper when it launched, but it was the most honest. And in a community built entirely on trust between strangers exchanging data over anonymous phone lines, honesty was worth more than a marketing claim. The company's most serious rival in that world was Telebit, a competitor whose Trailblazer modem had captured the loyalty of the Unix and academic networking crowd with its own proprietary high-speed protocol, PEP. For a stretch of the mid-1980s, the two companies fought a quiet, highly technical war for the allegiance of the exact people who would decide, one recommendation at a time, which modem brand the rest of the country eventually bought. US Robotics won that fight not by outspending Telebit, but by outlasting it in the one arena that mattered most to a bulletin board operator: uptime. A SISOP running a BBS out of a spare bedroom was, in effect, running a small business on a machine that could not be allowed to fail. And word moved through FidoNet, message threads, and regional user group newsletters with the speed of gossip. By the late 1980s, a Courier HST modem sitting next to a BBS server had become something close to a credential, a signal to callers that the system on the other end was serious, reliable, and worth dialing back into. That credibility became the foundation the company would build its next decade on. But it came with a limitation nobody inside US Robotics could ignore forever. The HST protocol, for all its reliability, was proprietary. It worked at full speed only when a Courier modem was talking to another Courier modem, which meant its advantages evaporated the moment a caller's computer sat behind a cheaper, standards-based device from another manufacturer. Inside a closed community like FidoNet, where operators actively coordinated on hardware, that was a minor friction. Inside the much larger, much less organized market US Robotics was about to enter, ordinary American households buying their first modem with no idea what protocol meant, it would not be a minor friction at all. It would be the exact problem the company's next product line was built to solve. By the end of the 1980s, US Robotics had done something almost no other Chicago manufacturer of its size had managed. It had built a national reputation entirely from the bottom up, one satisfied bulletin board operator at a time, without a single national advertising campaign. Industry estimates from the period put the company's employee count in Skokie at several hundred, its annual revenue climbing steadily into the tens of millions, and its name recognized with genuine reverence inside a hobbyist subculture that most of corporate America did not yet know existed. The company that would eventually put a modem in a meaningful share of American homes was still, as the decade closed, a business the average American had never heard of. Respected by engineers, trusted by insomniac hobbyists, trading files over ordinary phone lines, and one product decision away from becoming something else entirely. The product that changed everything for US Robotics did not carry the Courier name. It carried a new one, chosen because it sounded fast and approachable in a way the engineering-heavy Courier line never had: Sportster. Introduced in the early 1990s, the Sportster was built for a customer the company had never seriously sold to before. Not a bulletin board operator, not a corporate IT department, but an ordinary American family bringing home its first personal computer and discovering that the machine was only half useful without a way to connect it to something beyond the living room. At launch, a Sportster modem carried a retail price in the range of $150 to $200 depending on speed, a figure that in today's money runs close to $300 or $400, sold not through mail-order catalogs anymore, but through the exact retail channel reshaping American commerce in that decade. CompUSA, Best Buy, Circuit City, the big box electronics floor where a modem now sat on a shelf next to sound cards and joysticks, priced for an impulse decision rather than a considered purchase by a specialist. The timing was not luck. It was the collision of three forces at once. Personal computers were entering American homes at a pace no one in Skokie could have predicted a decade earlier, with IBM-compatible machines and their clones dropping in price every year. Online services, Prodigy, CompuServe, and a fast-growing challenger called America Online were signing up new subscribers by the hundreds of thousands, each one requiring a modem to dial in. And the modem itself, thanks to a new generation of standardized protocols, no longer needed to match a proprietary technology on the other end of the line to work at full speed. U.S. Robotics had spent 15 years building a reputation for reliability inside a tiny technical community. Now that reputation, backed by real engineering and real speed, was ready to meet a market of tens of millions of people who had never heard of FidoNet and never needed to. What that market bought, without fully understanding what it was buying, was a sound. Every American who owned a modem in the 1990s can reproduce it without being told what it is. A burst of static, a rising electronic shriek, a rhythmic pulse of tones that sounded less like data and more like an argument between two machines, ending in a sudden hiss of white noise that meant the connection had, against all apparent odds, succeeded. That sound was the audible signature of two modems negotiating a shared language across an analog phone line never designed to carry it. Handshaking, in the industry's own term, a process of trial and adjustment compressed into 8 or 10 seconds that most Americans experienced as pure anxiety followed by pure relief. Parents learned to recognize it through a closed bedroom door as proof their teenager was, in fact, online and not doing homework. Teenagers learned to mute a television during it so a sibling picking up the kitchen phone would not sever the connection mid-download. It was inconvenient, unmistakable, and by the middle of the decade, it was one of the most widely shared audio experiences in American domestic life. A sound with no melody and no message that an entire generation would later recognize instantly, decades after the last modem in most households had gone silent for good. By 1995, records from the period put U.S. robotics revenue at several $100 million annually, a number that would have seemed impossible to the four founders working out of a cramped Chicago office space 2 decades earlier. The Sportster line had done what the Courier line, for all its technical respect, never could. It had made U.S. robotics a name recognized not by a subculture, but by the country. The company that had built its reputation one bulletin board operator at a time now had a mass-market brand, a retail presence in every major American electronics chain, and a growing appetite from Wall Street. It also had, sitting just ahead of it, the single strangest and most consequential technical fight in the company's history. A battle over a number, 56,000, that U.S. robotics would start and the rest of the industry would be forced to finish. Speed had always been the currency U.S. robotics traded in, and by 1996 there was one number left to chase: 56,000 bits per second, the theoretical ceiling of what an ordinary analog telephone line could carry. Reaching it first was not simply a matter of engineering pride. It meant owning the last meaningful performance claim the modem industry had left to sell, at the exact moment American households were signing up for dial-up internet access by the millions, and judging every provider, every device, every minute of waiting by one metric alone: how fast the page loaded. U.S. Robotics announced its answer first, a technology it called X2, rolling it out to retailers in early 1997 with an upgrade path for existing Sportster and Courier owners, and a marketing campaign built entirely around a single promise: the fastest legal modem speed physically possible over a copper phone line. And U.S. Robotics had it before anyone else. It did not have the market to itself for long. A rival consortium built around chipmakers Rockwell and Lucent Technologies answered within months with a competing 56K technology called K56 Flex, compatible with a different, incompatible set of hardware. And the two systems could not talk to each other at full speed under any circumstances. What followed was not a healthy competition. It was a genuine crisis of consumer trust, playing out in the exact retail aisles where the Sportster had made its name. A customer standing in a CompUSA in the fall of 1997, holding a box that promised 56K performance, had no reliable way of knowing whether their internet service provider's modem bank on the other end spoke X2 or K56 Flex. And if the two did not match, the customer's brand new modem would negotiate down to a fraction of its advertised speed. connecting no faster than the standard model it was supposed to replace. Internet service providers, unwilling to bet their entire subscriber base on one format, found themselves forced to install and maintain both systems in parallel, doubling infrastructure costs to serve a customer base that had no idea a format war was even happening until their own connection failed to deliver what the box promised. The confusion reached deep enough into the ordinary American buying public that it triggered the exact outcome no proprietary technology war ever wants: government and industry intervention to settle by committee what the market could not settle by competition. The International Telecommunication Union, the global standards body responsible for telephone technology, stepped into the fight and began work on a unified 56K standard that would replace both X2 and K56 Flex entirely, rendering the format war moot by making both original technologies obsolete on the same day. That standard, published in February 1998 as V90, required U.S. Robotics to do something the company had never had to do before in its 22-year history: abandon a proprietary technology it had spent its own research budget developing, and adopt a shared standard written by committee, alongside the same Rockwell-Lucent alliance it had just spent a year fighting for market share against. The irony sat close enough to the surface that industry trade press of the period noted it openly. A company built on the principle that proprietary technology, done better than the competition, was worth paying for. The same principle behind Courier, behind HST, behind the entire Chicago engineering culture that had made U.S. Robotics different from every mail-order modem clone of the 1980s, had just been forced by regulatory consensus to concede that the American modem market no longer had room for a technical advantage that only worked with itself. The 56K war had cost the industry an estimated tens of millions of dollars in duplicated infrastructure and consumer confusion, according to trade estimates from the period, and it had cost U.S. Robotics something less measurable but more permanent. The last chapter, in which speed alone, achieved first, was enough to win. What the company had instead, heading into 1997, was a brand stronger than it had ever been, a stock price rising to match it, and a boardroom in Massachusetts at a much larger networking company called 3Com that had started paying very close attention. By the middle of 1996, U.S. Robotics had become something its four founders could not have imagined from that cramped Chicago office 2 decades earlier. A genuine Wall Street growth story, trading on NASDAQ under a ticker that institutional investors were beginning to watch as closely as any name in personal computing. Records from the period placed the company's annual revenue above $1 billion for the first time in its history, built almost entirely on a category of hardware that had not meaningfully existed as a consumer product a decade before. Employee count in the Chicago area alone had grown into the thousands, spread across manufacturing, engineering, and a sales organization that now had to serve not just hobbyist mail order and BBS operators, but the largest electronics retail chains in the country, and increasingly, the internet service providers themselves. The modem banks at America Online, at CompuServe, at the thousands of smaller regional dial-up providers that had sprung up in nearly every American city and required industrial quantities of the exact hardware Skokie was building. That dependency ran in both directions, and it is the detail easiest to lose in hindsight. America Online alone was adding subscribers by the hundreds of thousands each quarter through the mid-1990s, and every one of those new households needed a modem on each end of the call, one in the customer's home, one in a rack at an AOL data center. U.S. Robotics built dedicated rack-mount modem banks specifically for that institutional market, selling to internet service providers at a scale most Americans buying a single Sportster off a retail shelf never saw or considered. By one account, U.S. Robotics equipment carried a meaningful share of all dial-up internet traffic passing through American phone lines by 1996, not because any single American chose the brand deliberately, but because the infrastructure connecting them to the internet on both ends of the call had increasingly been built in Skokie, Illinois. What that scale produced for the ordinary American household was not a statistic. It was a sound, a weight, and a ritual, repeated nightly in millions of homes across the country. The modem dial tone interrupted by a burst of touch-tone digits. The pause, the rising shriek of handshaking that anyone who lived through the decade can still reproduce without being asked twice. The particular tension of a phone ringing in another room during that window, and the sinking knowledge that answering it would sever the connection and send the entire process back to the beginning. Families negotiated informal house rules around it. No incoming calls after 9, a note taped to the kitchen phone, a teenager's fury at a sibling who picked up the line 30 seconds into a download that had already taken 20 minutes. None of that ritual belonged to any single online service or any single website being loaded. It belonged to the hardware performing the handshake, and for a remarkable share of American households in that decade, the hardware performing it was built by a company most of those households could not have named, in a Chicago suburb most of them had never heard of. The company's institutional standing kept pace with its household presence. U.S. robotics equipment moved through the General Services Administration schedule into federal agency purchasing, into university computing centers upgrading their dial-in access for a growing population of students with computers in their dorm rooms, and into the network operations centers of internet service providers that in some regional markets ran almost entirely on Skokie-built hardware. The Sportster name had become, for an entire American generation, close to a generic term for a home modem, the way Kleenex had become a generic term for a facial tissue. A level of market saturation few American hardware brands of any category achieve inside a single decade. It was this version of the company, at genuine institutional and cultural peak, trading near the top of its own history, that caught the full attention of a much larger telecommunications equipment maker headquartered outside Boston. What 3Com was about to offer would value that peak at a price no modem company, before or after, would ever command again. On February 26, 1997, 3Com Corporation announced it would acquire U.S. Robotics in an all-stock transaction valued at approximately $6.6 billion, a figure that made it, at the time, one of the largest technology mergers in American history, and, by a wide margin, the largest sum ever paid for a company whose primary product was a device for connecting a home computer to a telephone line. The deal closed in June of that year. Under its terms, U.S. Robotics shareholders received 3Com stock at a ratio that, at the announcement price, valued each U.S. Robotics share at a premium that made the company's Chicago area founders, engineers, and early employees, who had held on to their equity through 2 decades of unglamorous growth, wealthier in a single transaction than the entire company's revenue had been just 5 years earlier. Casey Cowell, the 22-year-old who had helped start the company out of a cramped office space in 1976, was in his early 40s when the deal closed, and by every public account emerged from it one of the wealthier businessmen in Chicago. The logic behind the price at the time was not irrational. 3Com was a networking equipment company that made its living selling the hardware corporations used to build internal networks, and it saw in U.S. robotics the single fastest growing category adjacent to its own business. The hardware that connected millions of individual American consumers to the internet, at a moment when nearly every American telecommunications analyst assumed dial-up access would remain the dominant connection method for years, if not a full decade, to come. U.S. Robotics brought 3Com not just the Sportster and Courier brands, but the rack-mounted modem infrastructure sold directly to internet service providers, a manufacturing base, and a market share in consumer modems that analysts of the period placed above 30% of the entire American retail market. On paper, 3Com had just purchased the on-ramp to the internet itself, at the exact moment every household in the country appeared to be racing to get on it. The acquisition also carried inside it, almost unnoticed at the time, a smaller and stranger asset, a struggling handheld computer division called Palm Computing, which U.S. Robotics had itself acquired only 2 years earlier and had never fully integrated into its modem business. Palm arrived at 3Com as a footnote to the modem deal, valued at a fraction of the total transaction price, considered by most of the financial press covering the acquisition to be an afterthought attached to the real prize. Within 3 years, that footnote would be worth more on paper than the entire company that had once owned it. A paradox this channel has told in detail before, in the story of 3Com itself, and one worth naming again here because it began, quietly, inside this exact deal, in this exact year, wearing the U.S. Robotics name on its way through the door. But the modem business itself, the $6.6 billion prize that had made the entire transaction the biggest story in American technology that February, was already standing on ground that was shifting beneath it faster than either company's boardroom had modeled. The V90 standard settling the 56K format war would publish within a year, closing the last chapter in which modem speed alone could drive a premium purchase. Cable television companies and regional phone carriers were already piloting broadband internet service in test markets across the country, technology that did not compete with U.S. robotics on speed so much as make the entire category of analog dial-up hardware obsolete by definition. 3Com had paid the highest price ever recorded for a modem company at the precise historical moment. The modem, as a category, had less time left than anyone in that boardroom understood. The acquisition that looked in February 1997 like the shrewdest bet in the history of American consumer telecommunications hardware was about to become something closer to the opposite. And the reckoning would not take a decade to arrive. It would take barely 3 years. The first sign the ground had shifted did not come from a competitor. It came from a cable company. In 1997, the same year 3Com finalized its acquisition, a small number of American cable providers began piloting a technology that had existed in laboratories for years but had never reached ordinary households, sending internet data over the same coaxial line that already carried television into American living rooms. At speeds that made the 56K standard, U.S. Robotics had just fought an entire industry war to define look. By comparison, like a relic from an earlier decade. A cable modem in a 1998 pilot market could deliver data 10 to 20 times faster than the fastest dial-up connection physically possible over copper telephone wire, with no handshake tones, no busy signal blocking the household phone line, and no 8-second wait before a page could begin loading. Regional telephone carriers answered with a competing technology of their own, digital subscriber line service, delivered over the same copper wire a dial-up modem used, but engineered to carry data on a separate frequency the phone company's own voice traffic never touched. 3Com's internal response, by the account of trade press covering the networking industry through 1998 and 1999, was neither denial nor panic, but a slower, more institutional kind of drift. The company had just spent $6.6 billion establishing itself as the dominant name in consumer internet access hardware. And its investment, understandably, continued flowing toward defending and extending that dial-up franchise rather than pivoting the newly acquired U.S. robotics engineering teams toward broadband hardware. A cable company or phone carrier, not a modem manufacturer, was best positioned to sell. It was a defensible decision in the moment and a costly one in hindsight. The same pattern industry analysts of the period noted that had cost other American hardware makers their footing when a new distribution technology arrived, wearing an unfamiliar company's name. The numbers moved faster than the strategy could adjust. Industry estimates place American broadband subscriptions at under 1 million households at the start of 1998 and above 10 million by the end of 2000, a rate of adoption that outpaced even the most optimistic growth curve dial-up internet access had managed in its own best years. Every household that signed up for cable or DSL service was a household that no longer needed a modem at all, and internet service providers that had spent the 1990s buying U.S. robotics rack-mounted modem banks, by the thousand began redirecting that same capital toward broadband infrastructure instead. The retail shelf space that had once been a Sportster showcase at every major electronics chain in the country began shrinking quarter by quarter, replaced by cable modems and DSL routers carrying names that, in most cases, were not U.S. robotics at all. By early 2000, less than 3 years after paying the highest price in the industry's history to acquire it, 3Com made the decision that closed the loop on the entire transaction. It announced it would divest the U.S. robotics business, spinning the modem operation back out as a separate entity rather than continuing to carry a division whose core product category was shrinking in real time. The company that 3Com had valued at $6.6 billion in 1997 changed hands in the divestiture at a fraction of that figure. Trade press coverage of the period placed the transaction in the low hundreds of millions, a number that, set against the original purchase price, represented one of the steepest single-asset value collapses recorded in American technology history over a comparable span of years. The modem had not simply lost a format war this time, it had lost its reason to exist in the American household at all, And the company built to manufacture it faster and better than anyone else in the country now belonged to whoever was willing to take on what remained. What remained changed hands twice more before the decade was finished, and each transaction told the same story from a slightly smaller vantage point. The private equity firm Platinum Equity acquired U.S. Robotics out of the 3Com divestiture, taking on a brand that still carried genuine recognition in American households, even as the product category behind it kept shrinking. Under Platinum Equity's ownership through the 2000s, the company did what a smaller, leaner U.S. Robotics had never needed to do in its first 2 decades. It retreated from the mass consumer retail floor that had made the Sportster name a household fixture and repositioned itself toward the corners of the market where a dial-up or analog connection still had a genuine, if shrinking, purpose: fax over modem hardware for small businesses, backup connectivity for point-of-sale terminals that needed a fallback when a broadband line failed, remote industrial monitoring in locations too rural for cable or DSL to have ever reached. It was survival by specialization, the same strategy nearly every American manufacturer displaced by a faster, cheaper successor technology eventually attempts, with the same mixed record of success. In June 2013, ownership changed again. Unicom Global, a private diversified technology holding company built by founder Corey Hong around enterprise software and legacy systems integration, acquired U.S. Robotics and its remaining subsidiaries from Platinum Equity in an all-cash transaction. The public announcement of the deal described a company that, by then, sold data transfer equipment, remote management hardware, broadband backup devices, and machine-to-machine connectivity products. A product list that would have been unrecognizable to the bulletin board operators who had first trusted the courier name in the 1980s, built almost entirely around markets that had not existed or had not mattered to U.S. Robotics during the company's Sportster era peak. The headquarters moved a short distance within the Chicago suburbs, from Skokie to Schaumburg, a detail small enough to go unnoticed by anyone not tracking the company closely, and telling enough to anyone who was. The geographic heart of the operation was intact, even as almost everything built around it had changed. The cascade beneath the corporate transactions was harder to see in a press release, but easier to feel in the American communities that had depended on the company at its peak. The electronics retail chains that had once dedicated shelf space to Sportster displays, CompUSA, Circuit City, closed or restructured through the 2000s, victims of the same broadband-driven shift in American retail that had ended U.S. Robotics' own consumer dominance. The internet service providers that had bought modem banks by the thousand, the regional dial-up operations that had once served nearly every American city and small town, consolidated or shut down entirely as broadband infrastructure reached further into rural America each year. The technical support callers who had once talked confused first-time users through configuring a Sportster's DIP switches and initialization strings, a skill set with its own internal training manuals and its own kind of expertise, found that expertise had nowhere left to be applied, not because they had done the work poorly, but because the machine they had spent careers supporting no longer had a place in the American home it had once defined. U.S. Robotics did not disappear. That is the detail that separates this story from some of the others this channel has told. The company survived every transaction, every divestiture, every collapse in its core product category, and it survives today, still headquartered in the Chicago suburbs, still carrying the name Casey Cowell and his co-founders chose in 1976. What did not survive was the version of the company that had once been worth $6.6 billion, the version whose product defined a nightly ritual in millions of American homes, the version whose sound an entire generation could still reproduce from memory decades after they last heard it for real. That company is gone. What is left is smaller, quieter, and entirely unrecognized by the country it once connected to the internet, one handshake at a time. U.S. Robotics still exists. Its headquarters sits in an unremarkable office building in Schaumburg, Illinois, a short drive from the Skokie address where 4 college graduates once built modems in a space barely large enough to hold them. It still sells hardware under the Unicom Global umbrella: routers, VoIP equipment, remote connectivity devices for businesses that need a reliable fallback when their primary internet connection fails. Almost none of it reaches an ordinary American household. The company that once had a meaningful share of the entire American consumer electronics market now serves a business-to-business niche most Americans will never knowingly encounter under a name most of them have not thought about in 20 years. The physical hardware survives in a different way. Sportster and Courier modems sit in closets and storage units across the country. Some still functional, most simply forgotten, occasionally surfacing at an estate sale for a few dollars, priced by a seller who has no idea what the device in front of them once meant to a household. Vintage computing collectors and retro technology communities online trade U.S. robotics hardware with real specificity. A working Courier HST commands genuine interest among collectors who understand exactly what protocol it ran and why it mattered to the bulletin board operators of the 1980s. A working Sportster, boxed with its original manual, occasionally appears in nostalgic unboxing videos made by people too young to have used one when it was new, drawn to it the way earlier generations were drawn to a rotary telephone, an object whose function has vanished, whose presence remains oddly powerful anyway. What vanished with the hardware was a skill and a sound in roughly equal measure. The technical support representative who could talk a confused customer through configuring an initialization string over the phone, patiently, one a command at a time, practiced a specific American expertise that simply had nowhere left to be applied once broadband made the skill unnecessary. And the sound itself, the handshake, the shriek, the static resolving into connection, survives now almost entirely as a cultural artifact, reproduced in nostalgia compilations, in internet culture references, instantly recognizable to anyone who lived through the 1990s and utterly foreign to anyone born after it. Few sounds in American domestic life have traveled so completely from universal daily experience to pure nostalgia in the span of a single generation. The surprise buried inside the company's own paperwork is the one still connecting Chicago to Silicon Valley today. The handheld computing division, U.S. Robotics, acquired almost as an afterthought in 1995 and carried into the 3Com acquisition as a footnote to the modem deal, was Palm Computing, the division that would go on to make devices that shape the smartphone every American now carries in their pocket, a lineage this channel has traced before, in the story of the company that briefly owned both the past and the future of American telecommunications hardware, without fully understanding it held either one. In a storage unit outside Chicago, in a box that has not been opened in years, there is a U.S. Robotics Sportster modem purchased sometime in the mid-1990s for around $200, plugged in for the last time before broadband arrived and never again after. The cord is still wound around it. No one has thrown it away, and no one has needed it in 20 years. Every week, this channel tells the story of the American companies that built the machines the office and the home ran on, and what the market did to them. Subscribe if that history matters to you. Somewhere in Chicago, the next one is still waiting to be told.